So today we're going to talk a little bit about charts, and I'm using Webull, and we're going to go over the difference between the adjusted charts and the actual charts. What are each used for, and which should you use? Hello my friends, this is Legend. We're going to take a look at the Webull charts today. So we're going to look over the differences between the actual charts and the adjusted charts. Because you know I do flip through them in my videos, and you may not know what they are, what the differences are, and why you would use one over the other one. So we'll go over a few examples of what each looks like when you flip between them, and which chart would you use when you're reviewing your stocks. So first of all, we're looking at the actual chart right here, and just to give a brief definition of basically what the actual chart gives you as far as an information wise, it is the actual movement of the candles, right, of the price throughout the day. So that is the real movement of that price. So when you get a distribution, or when you get a dividend, or if there's a stock split, you see that drop in the candles right here, right? So if I zoom in, you can see, for example, on our last distribution, and this is MSTY, right? On our last distribution, that price was right here, and it was sitting at that close of $16.94. And when it opened the next day on the X date, it opened at $16.05. So there is the drop right there, because the distribution comes out of the price of the stock itself, and that happens on the X date. So the actual chart will show you that real movement of the candle, right? Versus the adjusted chart. All right, here we are on the adjusted chart, and as you can see, it is very different, isn't it? You don't have that big drop in that candle shown right here. It is more of a smoother ride, right? You don't see those big drops or those big jumps or anything like that. It's quite smooth going through that distribution payout, right? And that's because when you have that distribution payout, all the candles prior to it is adjusted by that amount of the distribution, okay? So for this case, we got paid just over $1 in the distribution. So therefore, at that X date, all the candles before adjusted down that amount of the distribution. Therefore, that shifts those candles downward, and that's all the candles before it, and it shifts them downward by that amount of that distribution so that it gives more of a smoother look. It takes out the noise of the distribution, the dividend, or stock splits. It's easier to look at as far as using for the indicators and stuff like that. So for the adjusted chart, it will adjust and remove all of the stock splits, dividends, and it will smooth out those candles, right? And if you think about it, by it doing that, you're looking at more of a long-term look of the stock, right? Because you're not seeing that actual drop in the price in the candles. In my opinion, you're seeing a better look of the long-term price performance without all of the noise of the distributions, the stock splits, the dividends, and any other events like that. So it smooths everything out, and you can get a better view of what it's actually doing as far as performance-wise, right? Now, the one thing you do have to be careful with, because if we're looking at MSTY right here, and if I look at a long-term view of this chart right here, like this one, and this is a 5-year chart, okay? Now, it hasn't been out for 5 years, but it does capture all the candles, right? You can see from the start down here all the way up to here, it's got a nice upward movement. So the thing you have to be careful with on an adjusted chart, it is not giving you those actual prices, because as you well know, MSTY was not starting off at $4.43 and then ending at $15.38, right? We know that's not the case, even though the chart here is showing it. But that is how the adjusted chart works. It is adjusting for all of those distributions, and it is shifting all those candles down each time you get a distribution, and it shifts all of them down. So you can look at this and you can see the performance of MSTY overall is up, right? And that's the performance of MSTY. So it is moving up as far as the performance. The actual movement of the chart, well, if we look at that, right there's the actual movements of the candles. And we're looking at that 5-year time frame. But as before, it has not been out for 5 years, but that puts it in a weekly candlestick, right? So each one of these is 1 week. Now this one is the actual, so therefore this is going to give you the actual prices of MSTY. And if I hover over that first one, well, now we're looking at an open of $20.38 instead of that $4 and some odd cents, right? We knew the $4 wasn't right, and we know that the 20 is, right? So that's where it started. That's where it opened. And where are we now? Well, now we're at $15.38. So in the actual price movement, it is down, right? And you can visually see if you had a line from here right down through here, that's definitely a downward slope. And that's the actual price movement, right? But you got to understand, each time it gets paid out that distribution, that price drops, right? Because it comes out of the price. And it does recover at times, but there's other times that it doesn't. And lately, we've been going down in price, right? Because now we're at $15.38. So a line on the actual, it is pointing down. But the line on the adjusted, right here, it is definitely pointed up. So the performance of MSTY is up. And that just means that when you factor in those distributions, that is boosting MSTY up. Therefore, it's showing MSTY moving up as far as performance-wise. Now, when would you use one versus the other? Let's flip it back to the actual chart, and I am looking at the day chart, right? This is day intervals, right? As far as when to use the actual versus the adjusted chart, well, for the actual chart, you would be using that for your resistance lines and your support lines. And why would you use the actual versus the adjusted for the support lines and resistance lines? Well, that's pretty simple because you are wanting to see the actual price movement of each candle. And for this case, if we were to draw a little resistance line and say we put one in right at the top of this wick right here, and then say we put one in about right there, right? We're looking at this and we see this line right here as a resistance line. And we're showing this line here as a support line. It did stop and close here, and it has wanted to test this line, but yet has not closed below that line. So we're going to call this our support line. Well, you want to use the actual chart to find out what those resistances and support lines would be. Because if you use an adjusted chart, it could be skewed. Definitely if you're looking at anything further back past that distribution. So let's just do that and get a really good example. And for that, we'll actually say that we had a high back here in July of 22.96, and we've got our low right here at about this 14.84, okay? Now, I don't have them right on the money, right? They're a little bit off, but you'll get the idea. I'm a couple pennies off of each one for the line, but you'll see the difference once I flip this to the adjusted, okay? And that should help you to understand a little bit more of why it's important to use the actual versus the adjusted when you're looking at the price movements, right? And you're looking at price movements in order to draw in your resistance and support lines. So if we flip that back to the adjusted here, now we look and you can see that line here, it's still sitting right there where we left it, right? It was a few pennies off, but that is exactly where we drew it, right? Well, how about the one at the top? Let's go check that one out. Is it still at that 22? Wow, what happened here? Look at this. My line is still up here at that 22 range, but the actual candle is at $20.24. And that is showing you how much of a change that distribution here has made. It has moved it from that $22 range down to $20 range. Well, why is that? Well, because we got paid out 2 distributions right here. So when you take that top number up here and you subtract off those distributions right there, then that will put you pretty close, about right where this is now. Why is that? Well, remember, I said it adjusts by the distribution amount, right? All of the candles prior, all these candles back here, all of this will adjust down when the distribution pays out. And that's what we end up with the adjusted chart. And we zoom on out, we'll notice right back here is that $4, right? And we know it wasn't at $4. So we went from roughly a $20 opening down to a $4 opening between the 2 different charts because of all of the distributions that have been paid out. And that will account for some of that movement, right? That will adjust those charts to help smooth that out. So that's the reason why you would want to use the actual chart for looking at your resistance lines and your support lines. So what would you use the adjusted chart for? Well, the adjusted chart, because it's off of the performance and it takes the noise out from the other events that the stock goes through, whether it's dividends or distributions or stock splits or anything like that, you would use the adjusted charts for when you're actually looking at the indicators. So the actual is more for the movement of the actual price. So that is for resistance lines and support lines, or the Fibonacci retracement line or anything like that, that is looking at any type of supports, resistances, and the actual movement of the candles, right? For those things, you will use the actual chart. But the adjusted chart is for the other indicators like your RSI, your Bollinger Bands, or anything else that is looking more along the lines of the performance long-term of the stock itself. So for the adjusted charts, I'm looking more along the lines of using it for my Bollinger Band and my moving averages, because this is looking more long-term performance of the stock itself, right? So I want to know overall performance of the stock, not necessarily just the price movement, but the overall performance, which will help smooth out those noises from the distributions in the case of MSTY. So when I zoom all the way out to 1 year right here, you can see it's actually a nice little upward movement. And even though the price has dropped over this period of time, you've got to also understand that even using the adjusted chart, even though it wasn't at 752 back here, right? These are not real prices, but 752 to 1538 is almost $8, right? And all that means is even with the pullbacks in the price, this has continued to move up in the performance because it is paying out these distributions. And even though that price is getting pulled back and getting brought down, the distributions overall are keeping this stock moving upward. So that's a very interesting thing to see. At least it is for me. So like I said, really the biggest difference between the actual and adjusted for me is if I'm looking to set my resistance lines or my support lines, I'm going to use the actual chart. If I'm looking at the movement of the overall stock using the moving averages or the Bollinger Band or the exponential moving average, whatever kind of indicator that you want to use like that, that is more along the performance of the stock, then I use the adjusted charts. It just takes that noise out from the distributions and you don't see those drops in the price, which then do affect those moving averages and such. This helps to smooth it out and you actually can see the overall performance of the stock itself. And it just makes evaluating the chart much easier than it is when you're looking at an actual chart. But like I said, both have their purposes. So I just wanted to do a quick little video on the differences and how I use the actual versus the adjusted charts. So I think I'm going to wrap it up right there. So if you don't mind hitting that subscribe button if you're not already, and please hit the like button as it does help the algorithm for the videos. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.